Good morning and welcome to NYSE TV Live. I'm Trinity Chavez and today is Thursday, May 16th, and we are coming to you from high above the trading floor at the New York Stock Exchange. And in just about a half an hour, the Federal Agriculture Mortgage Corporation, also known as Farmer Mac, will ring the opening bell to kick off another busy day of trading. They are here for an investor day, which is taking place on the 6th floor of the NYSE, so they have a very busy day ahead. And to give you all a little more information on this company, Farmer Mac, which trades here at the NYSE under the ticker symbol AGM, is a government-sponsored enterprise created by Congress in 1988. Its mission is to improve the availability of long-term credit for American farmers, ranchers, rural homeowners, businesses, and communities. The corporation provides financial solutions to much of the agriculture community, including agriculture lenders and agribusinesses that can benefit from access to flexible, low-cost financing and risk management tools. Farmer Mac is also achieving this in various ways. Its loan purchase solution provides mortgage products at attractive rates and terms to enable banks and other financial institutions to confidently serve their farm and ranch customers. Next, the USDA Guaranteed Loan Purchase Solution aims to help lenders preserve capital and offer borrowers attractive rates and terms. Meanwhile, the corporation's credit protection solution provides guarantees for loans on lenders' balance sheets, which is designed to manage concentrated limits and provide capital relief. Finally, Farmer Mac's wholesale financing offering enables AG lenders, agribusinesses, and investment firms access to flexible, low-cost funding. Now, the company says that its team has experience underwriting more than 144 commodities, ranging from cattle to cassava melons, from permanent planting to processing facilities. Now, the corporation also says that it has helped fund loans to over 100,000 rural borrowers in all 50 states, providing more than $81 billion of investments in rural America. Farmer Mac also added that in 98% of its farm and ranch and USDA guaranteed loans are to family farms. The company, which is based in Washington, D.C., isn't the only recent arrival to the exchange from the nation's capital. Earlier this month, First Lady Dr. Jill Biden spoke at the Women's Health Summit event held inside the walls of this iconic institution. Here's a message from the First Lady and some notable investors from the event.
Women's health is President Biden's priority, and we must invest in it now.
Women's health is the most exciting new area of science. We're finally starting to understand what having two X chromosome means.
Women's health to me is finally honoring that my biology is different to men.
Women's health is about the health of more than half the population of the world, which is not the same as the other half.
Understanding women's biology and how our needs change from the time that we're little girls till the time we're much older.
Women's health is about taking care of women all the way through that lifespan.
So that my daughter's generation grows up being as healthy as possible and hopefully, as she tells me, lives to be 121.
Having a seat at the table is incredibly important.
We need to be not only at the table, but at the head of the table and in the seat of power.
To be in decision-making roles is critical, not just for herself, but for her family, as a decision maker in the community, and globally as it relates to policy change.
To me, women's health is grace and power.
My life's passion.
Women's health is a way to rock the world.
Is the full spectrum of care that affect our health.
To me, women's health is $1 trillion opportunity.
It's an exciting area for innovation and investment.
Primed to create new businesses and new opportunity.
Women drive the economy. We are not a niche market.
Women's health is health.
I also recently caught up with Will Goodwin, Director of Operations at the NYSE Institute here at the New York Stock Exchange, who also shared some more details about her visit.
We welcome Dr. Biden here to 11 Wall Street to serve as the keynote speaker of the NYSE Women's Health Summit, which is a chance to convene listed companies, entrepreneurs, investors, and others to help put more money toward women's health, an area that has been historically underfunded and under-researched. And in parallel to that, the First Lady recently launched the White House Initiative on Women's Health Research, which aims to do the same thing in the federal government, bringing resources and focus, energy to helping improve outcomes for women when it comes to healthcare.
Talk to me about also the Biden administration recently announced $46 million initiative to really spearhead behavioral health. So they're really leaning into the whole health sector overall. Talk to me about the significance in her being here for this event, being the keynote speaker to really continue this momentum.
Sure, and I think, Trinity, it's a reminder for us that research dollars from the public sector have historically led to great gains in health outcomes for Americans. So I think that's what you're seeing with these new investments targeted over specific issues like women's health, mental health, et cetera. For the First Lady with this initiative, she wanted to deliver a message directly to the private sector, which is watch what we're doing on the federal side at the federal government level and contribute in parallel, and let's work together to create an even better outcome with the public and private sector working together. And for her to deliver that message directly to private sector leaders, she chose to come here to the New York Stock Exchange and deliver that message from the boardroom. And it was a truly impactful event for everyone who was here that day.
Tell me about how important it is for both the public and private sector to work together cohesively when it comes to addressing some of the major problems right now we are seeing when it comes to health overall.
Sure. I mean, it's true with health and it's true with a lot of other issues, which the NYSE Institute works on. And it's common sense, right? We can have one approach in the public sector and one approach in the private sector, and maybe there's alignment. But if there's a deliberate effort to come together and say, how do we produce better outcomes when it comes to healthcare? How do we create inclusive economic growth? We can do more when those conversations are happening.
Having the First Lady here at the Exchange to address these problems and work on these initiatives is hugely important. Talk to me about the process in which it took for her to actually get here.
Sure. Well, I mean, again, this started with a great event that we created here at the NYSE that was so compelling that the First Lady wanted to deliver her high-level message to the private sector in a keynote address at the Women's Health Summit. So that's sort of foundational. This is something that took a lot of work across our team, as you can imagine. A visit of this magnitude has a lot of moving pieces. Every detail matters to make sure that it's a great experience for the First Lady and also for the attendees who are here. And we're really proud of how it turned out. And I think it's a reminder for all of us who get to work here at 11 Wall Street of just what the New York Stock Exchange means to our leaders in the United States and around the world.
And speaking of leaders here in the United States and around the world, talk to me about some initiatives that you have going on. You're the Director of Operations for the NYSE Institute here. So what do we have coming up the pike?
As I told you earlier, Trinity, business is booming at the NYSE Institute under the leadership of our Vice Chairman, John Tuttle. And I think that's a reflection of how much demand there is from both sides, the public sector and the private sector, for leaders to come together. And that's why the NYSE has always served as a vital bridge between public policy and commerce. Obviously, 2024 is a major year for elections here in the United States, but also around the world. And geopolitical issues are also front and center in the minds of corporate leaders. So the demand has never been higher for the high quality type of engagement that we help facilitate at the NYSE Institute.
A lot to look out for from the NYSE Institute, but we're going to switch gears a little bit now. The Exchange will also be celebrating a notable birthday this Friday, and it's its own. The epicenter of the global financial markets will be turning 232 years old and has grown to include over 2,400 listed companies, accounting for roughly $40 trillion in total market cap. And the Exchange has become synonymous with corporate giants and hosts some of the most recognizable names like Coca-Cola, IBM, Disney, and offering investors the opportunity to invest in well-established, trusted companies. But there's so much more the Exchange has to offer and cater to than just its listed companies. The NYSE curator, Anna Mello, takes a closer look at the Exchange's story. Let's take a look.
This year, the New York Stock Exchange is celebrating our 232nd anniversary on May 17th. The history of the exchange has always been a history of technological disruption. As capital is raised, shares are traded, and information is disseminated with the public, it is always using the most advanced technology of the time for over 2 centuries. When the New York Stock Exchange was founded in 1792, trading looked far different than it does today. We operated as a call market, which looked a lot like an auction. The president of the exchange would stand at the front of a room and he would call the name of individual securities to be traded in increments of 5 minutes each. Asking price, actual price, and final price were all recorded in a quotation book just like this one, dating from 1819. The stock ticker, the first market-specific invention and arguably the technology most closely associated with the markets, was introduced to the New York Stock Exchange in 1867. Up until the 1990s, when traders adopted the internet, stock tickers provided vital market information to businesses and news organizations. A stock ticker is essentially a specialized telegraph that prints an alphanumeric symbol onto a piece of ticker tape, alongside the current price of a company's stock. This particular example is one of the earliest stock tickers used at the New York Stock Exchange, dating from 1880. It was able to print 250 characters a minute. The New York Stock Exchange nickname of the Big Board derives from our original broker paging system, the Annunciator Board, installed in this building in 1903. Each of these Annunciator numbers was painted with an individual member's broker number and arranged on either side of the trading floor in racks 800 square feet each. With the press of a button, one of these flaps could be flipped over, alerting a broker on the floor to the fact that he had an order waiting with his clerk. These were eventually replaced by an electronic paging system. The original high-speed data network of the New York Stock Exchange was installed in our current building in 1903, a pneumatic tube system that sent trade tickets all around the exchange. Executed trades were written or typed out onto a slip of paper and then inserted into this tube called a widget. The widget was then placed inside one of these terminals, each labeled with its destination, and then a puff of compressed air from the compressor down in the basement would send it off to its destination in 15 seconds every time. By 1979, the information age was fully underway, and in order to remain cutting edge and relevant, the New York Stock Exchange had to innovate itself. From 1979 to 1981, on the floor of the exchange, over 15,000 pounds of cathode ray tube television and computer screens were installed, all supported by our superstructure. During the renovation, not a single day of trading was lost. All of the construction went on behind the scenes, and new trading posts were installed over the weekends. Innovations and advancements in technology such as this allowed the New York Stock Exchange to achieve a market cap of over $1 trillion by 1980. Handheld touchscreen computers have been used on the floor of the New York Stock Exchange since the mid-1990s. This Epson handheld computer from 1997 ran the card reader replacement tool, which allowed staff reporters on the floor of the New York Stock Exchange to report outcry trades on the tape. Advancements in technology and increases in computing power such as this facilitated the New York Stock Exchange to achieving our first 1 billion shares day on October 28, 1997. Brokers and designated market makers on the floor of the New York Stock Exchange utilize an advanced high-speed data network and state-of-the-art technology to execute over 1 billion shares a day. Our new integrated trading technology platform, NYSE Pillar, was completed in 2023 and allows member firms to connect to all NYSE equities and options markets. Pillar improves efficiency while reducing complexity, while enhancing consistency and performance for all of our customers. What will the future hold? We are excited to see what's coming over the next 200-odd years as technology marches forever onwards and upwards.
And there are several ways for investors to gain exposure to equities, and one such way is through exchange-traded funds, better known as ETFs, which allow investors to achieve broad diversification while minimizing risk. NYSE ARCA has the greatest market share of traded volume and greatest depth of liquidity across all U.S. exchange-traded products. One firm offering a wide array of ETFs on the NYSE ARCA is Roundhill Investments. Its CEO, Dave Mazza, is joining me now to talk more about it. Good morning, Dave.
Hey, thanks for having me.
It's great to have you on the show today. Now, let's start talking about, for our viewers and investors who may be looking to get into the ETF space, what does your portfolio of ETFs offer that competitors don't, and how do you help minimize risk?
Yeah, you noted that ETFs have been a great innovation for investors because they offer tax efficiency, liquidity, the tradability, and flexibility that aren't found in other financial products. And a real benefit is that ETFs are listed securities like traditional equities. And investors can build globally diversified portfolios with ETFs across fixed income, across stocks, across commodities. At Roundhill Investments, we really focus on innovation. So whether that's innovation from emerging areas of the market, like the metaverse or generative AI, and then innovation in areas like product structuring. So Roundhill Investments is proud to have just crossed $1 billion in assets under management, and we look forward to continue growing with our investors.
And speaking of innovation, you mentioned Gen AI, you mentioned AI, arguably the most buzzworthy topic here on Wall Street. So how much more demand are you seeing when it comes to your chat ETF offering?
Yeah, so our chat ETF offering has been one of our fastest growing ETFs in the last year, and then on a year-to-date basis. And the real reason is quite simple. Chat is one of the only ETFs that focuses just on companies involved at the forefront of generative AI. So AI is a buzzworthy term. It can mean a lot of different things to different folks. The way it works with the chat portfolio is really focused on companies that are either enabling the growth of generative AI, so kind of picks and shovels, virtual picks and shovels plays, I should say, like NVIDIA and Supermicro, or companies that are now involved at the forefront of using it.
And your firm also offers investors exposure into the ETF space with major holdings like Roblox, which trades here at the NYSE under ticker symbol RBLX. So what are the biggest storylines investors are following right now in the metaverse space?
Yeah, the metaverse was a term that really came to the forefront a few years ago, even though it first came out in the 1990s. And companies like Meta have been really leading the charge with that. But when we think about the metaverse, some folks think it's actually slowing. We think the opposite. If you actually look at the data, where R&D is going, it's still being spent in the metaverse and growing. AI and the metaverse are not disconnected. The growth of AI actually becomes an enabler for the long-term growth of spatial computing, of the metaverse. So a lot of exciting developments that are happening, even if it's not on the forefront of investors' minds today, as all the focus really seemingly is on AI.
Yeah, it definitely sounds like that. Now, we understand that your team forecasted a 40% compound annual growth rate for the U.S. online sports betting and a 28% CAGR for U.S. iGaming from 2018 to 2033. So are these still trending like this in this direction? I mean, what's really fueling this momentum?
Yeah, so what's really amazing about the growth of iGaming and e-gaming is it's coming to fruition, right? More and more states are coming to market. We saw record iGaming growth in the first quarter. 5 states, the growth of 5 states that came online really helped with that. And this is something that's not trending down, right? So we're seeing the intersection of gaming with and sports betting with the growth of all different leagues coming online, which is really exciting. So we're seeing, in Q1 we saw 23% and 28% growth respectively, and something that's not really slowing down.
Now, we wanted this segment also in style, so let's dive into your Lux ETF, home to luxury brands like Ferrari, which trades here under the ticker symbol RACE. So are you noticing any changes in consumer spending habits due to the economic headwinds like inflation, or are luxury brands and consumers really just above these challenges?
Yeah, the global luxury market is around $370 billion globally, so it's a huge market. The growth trajectory that we're seeing is a bit more modest, so about forecasted for 7% growth from the end of last year to 2030. And it's really coming from a few areas. Primarily, the growth is to some extent in the US, but really in Asian markets like China. I think the economic slowdown that we saw a few years ago has impacted that market, but it's not gone away at all. And so as we begin to see economic recovery in a more material way, in particularly in the Asian markets, we believe that the luxury market will continue to grow. There's a lot of stability in those names, right? You're not all of a sudden going to be able. Most people are going to be able to wake up and buy a Ferrari unless life circumstances change. So there's actually more stable demand for luxury goods than people realize because of that.
Although many people I know would love to wake up and, buy a Ferrari. I know, I wouldn't mind that for sure. Well, anyway, thank you so much, Dave, for joining us on the show today.
Thanks for having me. It was a pleasure.
Meantime, I was just in San Francisco at NYSE Pacific covering RSA, one of the largest cybersecurity conventions in the world, and I spoke to some of the biggest industry leaders about the biggest challenges and trends we are seeing in this cybersecurity sector. I also talked about the convergence of networking and security into the cloud with co-founder and CEO of Cato Networks, Shlomo Kramer, and together we dissected the platform-based IT security company. Let's take a look.
So the cybersecurity market is broken for most enterprises that have to deal with hundreds and thousands even of point products and integrate many tens of them into a solution. That's becoming more and more expensive. So the IT security budget out of IT security, IT budget in general is growing all the time, but the security is not improving. The operational efficiency is not improving, and the business agility, the ability to address the needs of the digital business, is not improving. So there's a new way that is needed to consume and deliver security, and Cato came to bring this to the market.
And so you say that's how you're different from your competitors then?
All security companies, large security companies until today, were built around acquisitions. So tens of acquisitions creating a huge portfolio, but the customers are left to integrate this point solution into something that works for them. And that's extremely difficult.
And you know, Cato also created the Gartner category that would eventually be named SASE. Right. It's projected to be valued at over $25 billion by 2027.
Right.
And Cato actually has had significant growth as well, growing twice the rate last year, and today has more than 2,200 customers.
Right.
That's hugely significant. What do you think is driving this momentum and success?
I think the market has accepted the fact that network security needs to move from an appliance form factor to a cloud network form factor, a fluid form factor that addresses the need of the digital business, where people, applications, IoT is anywhere. And that's a huge market. That's a $30 billion market. And in actuality, SASE is just the snapshot of what Gartner took what we were doing in 2019. Mm-hmm. Our vision is to go well beyond network security and again be a broad IT security company that delivers everything as a platform.
How are you integrating AI into your business model, and how are you staying ahead in an ever-changing landscape when it comes to cybersecurity?
We are a cloud service, so we have a huge data lake from our customers, and we use that in order to build AI algorithms and deliver the best-in-class cybersecurity from day one. We were the first company ever to put AI models in line to protect customers and continue to be in the forefront of that area.
Well, thank you so much for joining me today.
Yeah, thank you.
Now, earlier this month, Farmer Mac released its Q1 earnings report. On the earnings call that followed, CEO Bradford Nordholm said that we are going to begin seeing more headlines above the Farm Bill, which was set up to expire in 2023, but was extended by 1 year. Now, the Farm Bill governs policy in many different areas related to the agriculture sector, including farm income support, food assistance, and trade. It's been around for nearly a century, too. In 1933, the Agriculture Adjustment Act went into law as a part of President Franklin D. Roosevelt's New Deal, and the act, which came into play during the Great Depression, created programs to reduce surplus and raise crop prices. Farmers were now eligible to receive a subsidy payment in exchange for agreeing to reduce production of certain commodity crops. Now, the Farm Bill is typically renewed every 5 years, giving policymakers a chance to address new agriculture policy issues. In total, the U.S. has passed 18 farm bills, with the most recent one being the Agriculture Improvement Act of 2018. As for a new bill, there have been some movements. Last week, House AG Chair G.T. Thompson, a U.S. Congressman from Pennsylvania, submitted a summary of the bill as he's scheduled the committee for markup next week. And earlier this month, AG Chairwoman Debbie Sturmnow, Democratic U.S. Senator from Michigan, released a section-by-section breakdown of her proposal. Meanwhile, according to The Hill, pharmaceutical manufacturing and big agriculture interests have spent more than $400 million lobbying Congress dollars on new farm bills. Now, according to the Union for Concerned Scientists, a national nonprofit organization, that's more than 4 times the amount of money spent on the public sector and civil society. But according to the AG Web, an outlet covering the latest trends in agriculture landscape, it says that we might not see a new farm bill until 2025. In a new survey AG Web conducted nearly the end of 2023, 50% of economists participating in the survey said that they do not see a new bill being passed at least this year. Among the biggest hurdles listed, participants listed the upcoming presidential election, overall legislative and turmoil funding issues, and competing priorities paired with limited time and lack of urgency around agriculture. Our own Judy Shaw recently spoke with Roger Mortella, GE Vernova's Chief Sustainability Officer, to discuss its unique sustainability framework, the acceleration of the energy transition, and how stakeholders influence sustainability outcomes for GE Vernova, which trades here at the NYSE under the ticker symbol GEV. Let's take a look.
Well, over the last 24 months, we really wanted to step back and build the leading company for the energy transition. So we said we also want to build the leading framework for the modern era. We don't want to just take anything for granted. So we started over on a blank piece of paper. And what we really focused on before we even put anything down were a few principles. We wanted to focus on impact. We can't be all things to all people. Our impact in the world is electrifying the planet, it's decarbonizing the energy sector. So we're going to focus on those core impacts. We also wanted to be pragmatic. We have to succeed first as a business if we're going to succeed for our sustainability goals. We're unapologetic about that. So we're really focused on business success, and my job is to align what we need to do as a business and how do we translate that into that broader public good where we're solving for climate change, electrification. And the third principle was credibility. We want to make sure we're speaking beyond reproach, that we're not using emotional language, and that we're being a bit of an honest broker in educating. That also means when we see things going well, we're going to share that. When we see things not going well, in the spirit of continuous improvement, we're going to be transparent as well. So these themes of impact, pragmatism, and credibility have really guided our approach in what we think is a leading modern era sustainability framework.
Now we're really seeing an acceleration in the energy transition. What's driving that?
You're absolutely right. And as a company that had something to do with the first energy revolution back to Thomas Edison, we're also seeing the leadership in the current, what we're calling a super cycle of the energy transition. And it's almost aligned to the last 24 months of us building GE Vernova. It's a number of factors. One thing is, the very tragic war in Ukraine, which has really woken up the whole planet. We're very proud of our support for Ukraine to keep the lights on, but it's really woken up the whole planet to say we can't take the grid for granted. How do we invest? How do we accelerate energy security, electrification? And then you have the growing demand generally. The IEA predicting a doubling of electrification demand from 2020 to 2040 because as other sectors decarbonize, they're joining the grid and electrifying. We're focused on energy security at the same time and resiliency. And of course, a hot topic here on the stock exchange, data centers, artificial intelligence, American competitiveness, and the additional demand drivers there. So we believe we're at the beginning of this energy transition super cycle. It's good for electrification. It's good for providing affordable, reliable, sustainable electricity to everybody. And as we do that, we're going to decarbonize the grid at the same time through innovation and technology.
And what are the focus areas in your technology pipeline? What are you investing in?
So we help produce 30% of the world's energy. And so we really have two views on how we decarbonize the grid while we're increasing capacity at the same time. The first is we're focused on this decade and the technologies that are kind of our core technologies today. Growing renewables as quickly as possible, making sure that we're supporting very reliable and efficient gas turbines all around the world, which can be decarbonized over time, nuclear power, and then just physically enhancing the grid, making it more resilient through transformers, high voltage direct current, and software that can orchestrate the grid and the electrons in better time and make the grid more secure. So that's this decade, and that's going to help us drive a lot of progress. But we know it's not enough to get fully to our goals. So we're in our labs, we're in our researches, innovating the breakthrough.
JD Durkin, host of thepublic.com and contributor for CBS News, is joining me now to talk all things headlines.
Everything.
Everything. It's always great to have you. Good morning.
Good morning. What a great morning it is here with this group. Everyone's enthused. It's great to be with you. Yeah, take your pick. Where would you like to start? Because there are so many stories that I think are important to investors.
Should we start with CPI data?
Let's start with
CPI data. Okay, all right, let me look at the numbers here. So April CPI data revealed 3.4% year-over-year growth. You know, I spoke to Jonathan Corpini yesterday. He said that this was kind of anticipated by investors. What's your take?
Yeah, I think the day before you're coming off wholesale inflation that came in hotter than expected. It was good to see some of those CPI numbers, I think, start to come back down to earth. But like you just said there, Trinity, these numbers are still too hot, I think, for the liking of the central bank. That really underscores the challenge we have right now in this kind of bifurcated economy. The wealthiest 2/5 of Americans are right now responsible for more than 60% of all consumer spending. That's keeping upward price pressure on all of those prices, but it's coming at the expense, I would argue, at the most vulnerable Americans, the younger Americans, lower income households. That really underscores the challenge for the Fed. I spoke with an economist at Wells Fargo this week who says you probably need to see 3, if not 4 more benign core inflation prints consecutively. In other words, like right in a row, month after month, to give the Fed confidence to lower rates. We're clearly not there yet, and so we'll have to see how the Fed takes this into consideration as it moves forward for the next FOMC meeting.
Okay, great. And, you know, I just want to point out right now we're seeing the team from Farmer Mac signing the wall as they make their way down the Bell podium, and we're going to see them on the trading floor as we get ready to speak to the executive team in just a few moments. But let's get back to the data, right? Okay, so you were mentioning how investors sort of anticipated all of this, but, you know, the first rate cut perhaps will happen in September. What do you think?
Maybe. I mean, a few months ago, we said, oh, it's probably going to happen like in the spring, maybe in May. And obviously, that's not the reality. Every time we get that hotter than expected inflation print, it just kind of pushing that, nudging along that time horizon further into the future. We do have 2 coming up for the summer. It seems like investors are expecting the Fed to not do anything, basically just sit on their hands. You get there to September, maybe a pause the week of the presidential election with another cut later in December. But again, I think as we continue to get hotter than expected inflation prints, maybe not quite to the comfort of the Fed, Trinity, honestly, I wouldn't be surprised if you and I are having this conversation 2 or 3 months from now, and the narrative is much more about the Fed not doing anything between now and the end of 2024.
Well, so I want to get into that because you kind of brought it up a little bit. The presidential election, obviously, like, investors are on high alert because of this, and it's probably the biggest thing right now that could move markets. So how do you anticipate this year's presidential election can impact that drop of interest rates?
Yeah, we always underscore the importance of Fed independence, as do Fed officials, right? They want to clearly communicate to the American public, we're not here to mess necessarily needlessly with monetary policy too close to an election. And in fact, we've heard that from Chairman Jay Powell atop the central bank as of late. He's gone out of his way to talk about the politics of all this. But obviously, you got 2 candidates up there. We just learned yesterday, interestingly, we will have 2 debates, at least for right now. They've agreed to 2 debates, one for the summer and one for September, which would be the week before the FOMC gets together for a meeting. So I think it's something that central bank officials are very conscious of, but I think for them, they want to keep politics off to the side, stick with the inflation data, and make their decisions on monetary policy based on what the data tells them.
And you know, you kind of alluded to it a little bit earlier, talking about Jerome Powell has a goal of like lowering interest rates by around 2%, but what do you think needs to happen for that actually to occur?
I think it all comes down to those core numbers, most specifically core PCE, right? We've got PPI we got 2 days ago, CPI on the consumer prices side. And to be clear, there are a lot of things in the American economy that have come down over the course of the last year. Things like eggs, things like different items, you know, bananas and fruits and apples, things you can get at the grocery store. The problem is rent inflation. It is shelter, it is gas, it is a lot of other components of food. Household appliances are more expensive now than they were 12 months ago. That's going to underscore the challenge. But really, if you look at those core numbers, you strip away food, you strip away energy because of how volatile they are. The Fed needs to take a closer look at those core numbers to really have confidence that they're going to be able to effectively cut rates. It doesn't seem as if they're really all that close.
You know, we know the presidential election, inflation, these are all topics that are making headlines around the world, but also meme stocks are making headlines. So what do you think investors should know on this front?
Be very careful. And I understand why critics like Jay Clayton, former SEC chairman, they're saying this is much closer to gambling than it is actually trading, and it's certainly not the fundamentals of long-term investing. And speaking of fundamentals, obviously a company like GameStop that had a market cap of $3 billion just a month ago probably should not have a market cap as of yesterday's open at $15 billion. But the meme craze is back. led by Keith Gill, Roaring Kitty, the guy who really started it all after 3 years of disappearing from public life. So you're in for these wild swings in stocks like AMC, in Reddit, which we covered here at an IPO just a few months ago. BlackBerry's even part of this conversation. After 2 explosive days of gains in a lot of these names, including GameStop, you had a day of huge selling. All these names were down big in the pre-market today, and I expect that volatility to continue. If you are interested in putting your money in these stocks, just buyer beware about the volatility that is likely to ensue for the rest of this week and probably for the next few weeks as well.
Proceed with caution. You heard it here first, and you didn't bury the lead on that one. I like how you entered that conversation was be careful.
Yeah, absolutely, and that's what analysts are telling me as well. Now, it's important to note, from economists that I've spoken with the last few days, they say we're likely not in for the total frenzy we had in 2021 because hedge funds are better prepared this time around. In fact, some of the price action tells us hedge funds were actually riding into the momentum that retail investors brought them into Monday's open, and ultimately it is a high interest rate environment. People likely have less money to spend or invest in some of these stocks. So I think it's unlikely we'll really see the total disruption we had back in 2021, but obviously and understandably, Trinity, this is something we're going to continue to talk about for quite some time.
A lot to look out for. Thank you so much, JD.
Thank you.
All right, now we're going to throw it to a quick video from Farmer Mac. We'll be right back.
There's a place where we grow things, build things, make things better. Put our hands, our hearts, our backs into it. It's a place called rural America. Some things in rural America will never change. Values that tie people to each other and to the land. And yet, these communities are changing and growing. Today, farmers digitally optimize production in real time. There's a growing focus on soil health. Producers are harnessing sustainable energy generation alongside food production. And ranchers are herding cattle with drones. It's a new frontier, and Farmer Mac is proud to be part of it. As the nation's premier secondary market for agricultural and rural infrastructure credit, we're uniquely positioned to provide our customers and their borrowers with flexible and innovative financing that fuels prosperity and rural America through good times and bad. We're accelerating rural opportunities, allowing farmers and ranchers to thrive. Because when rural America thrives, we all thrive. This is the place called rural America. Central to our nation, its impact can be felt everywhere. From Main Street to Wall Street, from the suburbs to the cities, all across America. And Farmer Mac is proud to be part of it. Farmer Mac, accelerating rural opportunities.
Bell ringer and Farmer Mac CEO and President Brad is here right now joining me. Let's talk about being here at the New York Stock Exchange, the significance. You just rang the opening bell, opened up the U.S. equity markets. How are you feeling right now?
I'm feeling great. This is a big celebration for us. This marks the 25th anniversary that we've been listed on the New York Stock Exchange, but we're also doing some other things while we're here. Upstairs, we're having our annual shareholder meeting and we're having an investor meeting. And we're doing that because we've got a lot of great stuff going on right now.
So you're going to be here all day. You got a very busy day planned ahead of you.
I'm here for 3 days, actually. Oh. Yes. So, yes, it is a busy day.
Very busy day. Now, you just reported earnings last week. What would you say the key takeaways are? What should investors know about your company?
Farmer Mac turned in yet another quarter of very, very consistent performance with strong growth in the high single-digit range, strong earnings growth year over year, 12% year over year, and we are continuing momentum that has really put us in the top decile of total shareholder return over the last 1, 3, and 5 years.
Amazing. I mean, now you joined as CEO in 2018. What would you say are your biggest accomplishments that you're most proud of, and what are your biggest priorities for the rest of the year?
Yeah. When I joined Farmer Mac in 2018, I saw an organization that was financially very, very strong, that had a clear mission, and that was in good shape, but there was an opportunity to drive more growth. And so over that period of time, I think accomplishments are putting together a first-class executive team, expanding, diversifying our business, all with the mission of serving rural America and then getting results from that. And that's showing up in our numbers today.
Thank you so much, Brad, for joining me today. Again, Brad Nordholm, CEO and President of Farmer Mac. Thank you for joining me. Bye-bye. All right, now we're going to throw it to a quick live look of the floor to capture all the excitement that's happening, and we'll be right back. Farmer Mac CFO Aparna Ramesh is joining me now. Congratulations.
Thank you. It's a pleasure to be here. Thanks so much for having us.
Absolutely. I mean, you're here for an investor day. You have a lot of things to tackle. I was just speaking with Brad about your earnings last week. You have had significant growth. How are you going to continue this momentum from your vantage point?
Well, I think there are a few things, that we're really focused on. One, just the diversification that we've continued to forge ahead in terms of our revenue streams. We see significant number of tailwinds in terms of renewable energy in particular, as well as just how we've actually expanded our focus on corporate agricultural finance, which is likely to be, these two areas are likely to be a significant driver of growth for us. And then, I really have to, make a nod to disciplined asset liability management. If you're following the banking industry at all, this is a discipline that's been long forgotten, but Farmer Mac, it's part of our DNA. We've done this day in and day out and done it really well. And I'm very, very thankful to our investors, our debt, our equity, our securitization, and our preferred investors who have continued to really, have faith in us and, made all of this possible.
As a CFO, what would you say the areas of business right now that you're most focused on?
Well, there are a few things. I talked about renewable energy as well as some of our counterparties within our rural infrastructure line of business. We're really focused on making sure that we can expand very effectively into some of these areas that really speak to our core competencies. So as a CFO, I'm really mindful about being a good steward of Farmer Mac's capital as well as expenses. And so we really try to keep our efficiency ratio, which is how much do we spend for every dollar of revenue that we bring in. And we try to really cap that at 30%. But I talked about some of these tailwinds in terms of just the areas of growth that we're seeing, especially in renewable energy as well as in the core agricultural sector. And we're going to be making some strategic investments there, both in terms of people as well as in terms of technology.
And, I want to talk about your earnings call a little bit. You had mentioned there are areas that are a priority to you. Obviously, cybersecurity, user privacy is a major concern. How is Farmer Mac positioning itself in a way to really address those concerns, those challenges, while also meeting customer demand and need?
Well, cybersecurity is only going to become more of an area of focus for us, especially as a publicly traded company with, now with the cyber rule that's come on. This is something that we're extremely well positioned for. We've recently made a lot of investments in our technology infrastructure. Let me just quickly mention something that I did say on the earnings call, which is, we are undertaking a massive overhaul of all of our infrastructure. And we're doing this with an eye towards really scaling our business profitability, as well as being very defensive, as we think about cyber threats. Most people don't know this, but we transact approximately $750 billion of cash on an annualized basis because there's so much money that flows through us. We're a primary issuer of debt, which, not a lot of entities are. And as a result, there's a lot of throughput in terms of cash. And with that, there's a lot of bad actors. And, so to be really defensive, we're always looking one step ahead and modernizing our infrastructure. So
always have to be one step ahead.
Ahead of, So So that's a major area of focus for us. But I also want to note that as we make these technology investments, we want to do this such that it's not a like for like. And as a CFO, I really want to be making sure that every dollar of investment is going towards a revenue strategy. So as we pivot from modernizing our core infrastructure, we'll start to look ahead and think about our loan platforms where we can really integrate a lot of new technologies, looking at things like AI, of course, some of which we've already done, but really thinking about new product sets that can really effectively fit into our technology stack. But yeah, we have an excellent team, wonderful colleagues, and can't really do it without them. So
amazing. Well, we look forward to your continued growth.
Thank you so much. This has been a pleasure.
Thank you so much. Thanks for having me. Now I'm going to bring in my colleague, Josh King. He is the head of corporate affairs for the NYSE. Good morning, Josh.
Good morning, Trinity. It's great to be with you.
It's great to have you, as always.
Today on the floor of the New York Stock Exchange.
As it always is. So tell me about the significance in having Farmer Mac here at the NYSE. They're going to be here over the course of a few days for their Investor Day. They ring the opening bell, open up the markets. Talk to me about that.
Well, two important points. I mean, if you look up at our big board, you see that the Dow is now trading at 39,895. So a big question is, are we going to be up 105 points and eclipse 40,000 points on the day that Farmer Mac is coming to ring the opening bell? That would be a great way for a piece of history of that video to last forever. But really what is important about, what's really interesting about today is, when you did your intro of the show and you usually go to Brad in the boardroom with Lynn Martin, that boardroom is getting ready for Farmer Mac's Investor Day and their board meeting. And we can't think of any better use of this building, of what used to be the Big Board Club, where our members would go and sort of while the hours away playing backgammon and having lunch and spending the day upstairs at the Big Board Club, than instead having it a place where all of our listed companies, like Farmer Mac, ticker symbol AGM, would come and say, can we use your boardroom to tell our story to our investors instead of maybe going to one of those hotels in Midtown. It's a great symbiosis, and we're so in our 232 years to be able to think about what's going to happen in our next 232 years. It's more relationships, longer periods of listing with companies like Farmer Mac, AGM, so that instead of coming back for their 25th anniversary of listing like they did today, we welcome them back in 25 years for their 50th.
And not a lot of people know the iconic rooms that we have here throughout this iconic building, a 231-year-old, 232-year-old institution, exactly, their birthday is coming up. So tell our viewers a little bit more about what actually takes place in the confines, outside the confines actually, of the trading floor and in the other rooms in this building.
Yeah, so upstairs, I mean, you just said goodbye to Bruce, to the team from Farmer Mac. They are heading upstairs to our boardroom. And those of you who watch NYSE TV on a regular basis, you know that as you begin your show, you often switch to video of the boardroom where we have the CEO and the investors and the board members celebrating an IPO, having their employees in that room having breakfast. But if you were to go upstairs right now, instead of a whole breakfast spread laid out and a sort of a pep rally situation laid out, you'd see rows of desks and chairs and tables. And this is where the most important investors, representing all of the institutional money in the agricultural space and thinking about the different plays that people can make, they're going to be listening to a story laid out over the course of an entire day. A story that is in some ways facilitated by you and Ian and everyone else on our team up in the control room, because while you're going to go off the air for NYSE TV, on the air will come Farmer Mac live streaming its investor meeting so that it can be transparent in what it's saying to all of its investors in addition to those that are in the room.
And we help offer that platform here. I also want to talk about our birthday, the NYSE's birthday, 232 years old. What are your priorities? I mean, you've been with the company now for several years, but what are your priorities as we enter this next year?
Well, think about 232 years ago, May 17th, 1792. As I was just talking to Farmer Mac, there's variations of the story, but the quick version is President George Washington is inaugurated right outside our street in 1789. He has a couple people on his team. One of them is a guy named Alexander Hamilton, who thinks it's important for a new nation like the United States to be able to have federalize its debt, to be able to levy taxes, raise a navy, and be able to trade with other nations in a way that they can trust one entity doing business with them rather than 13 new states, the former colonies. So we'll federalize that debt. Now that doesn't sit wonderfully with Thomas Jefferson or James Madison, so they make a compromise. The compromise is 1790 that says, we will let you do that if you move the capital to Washington, D.C. That creates this opportunity for brokers, May 17th, 1792, because there's all this paper being traded out on the street, and people don't know exactly how to work with that. So they say, if we create a standard approach, a fair and orderly market for these bonds, we can help this new country begin to thrive. That was 232 years ago. So now we've got these 2,400 companies that are part of our community. And we have companies like Farmer Mac, AGM, who are coming here to celebrate their Investor Day, tell their story to investors. What is the priority for me and my team? To do more things with you and NYSE TV and all of our storytelling platforms so that we can help these stories get a broader audience and people appreciate in a more granular and profound way what a company like Farmer Mac is doing to help the whole agricultural sector rise up.
Amazing. Well, thank you so much, Josh, for all of that insight.
It's great to host these guys. It's always great to see what you guys are doing on NYSE TV.
And it's always great to have you. Well, that just about wraps it up for us here on the trading floor at the New York Stock Exchange. Thank you all for tuning in. I'm Trinity Chavez, and we'll see you next time.
Iconic brands speak for themselves. The strongest brands stand the test of time. We are so excited to welcome you to our community. Today is all about you.
We've never lost sight of what we're trying to do and deliver that mission.
Going through this experience with my partners and my families has been unbelievable.
We imagined something that didn't exist yet, and we believed that we could do it.
You're going to look back on this accomplishment as one of the finest you've ever done.
I want you to know that the best is yet to come.
Just a few minutes, we'll go downstairs to the legendary New York Stock Exchange trading floor to ring the opening bell. The history here, the tradition, it's just incredible for us to be at this moment.